on that chart, what's the vertical axis showing? It's not price.
It's showing the number of people that are long, or the number of units. Positions. Number of Bitcoin long. Yeah. We just got a feed. Was that live? Yeah, great. Hi, everybody. Welcome to anybody who's come offline as well. So we've got our virtual theory weekend guys, we've got our physical theory weekend guys. They've put in a massive effort for the 2 weekends. We're going to do a quick crypto assessment with everyone and a wrap. This is kind of the end of after theory, so we're going to just take it to the live markets and charts, and you guys have been welcomed in as well for a short preview. So actually, what have we got? We want to look at Bitcoin first of all. So Bitcoin is the big dominant baby of the crypto land. You know that, I know that, we've all been there. And essentially it's the asset category. It's the bellwether stock for the asset category. So what is Bitcoin doing is an important question. And one of the key things we like to do is first understand where we are. I'm going to grab a really clean Bitcoin chart. I'm going to see if this Bitstamp one will be a little bit cleaner than my one with all the stuff. Let's take it out. Give me the time zone, please. There we go. Let's go up to probably your super macro. If we talk about a big time frame for Bitcoin, it's the only one that would probably be weekly. And in terms of this, it's difficult not to say it's an expansive market. This is what I'd call a non-log scale. So it looks very low slung all the way and then totally hyperbolic. If you look at that, you can't really get too much. So it makes sense when you start with if you're looking at an asset that has expanded immensely, to switch to log scale on your chart. Also, there'll be other exchanges which might have more of the history a little bit deeper in, but I've scribbled all over them, so we're going to go with the Bitstamp over here. It goes all the way back to 2012. That's a pretty good start. Yes, there was 09 to 12. We know that. But essentially, this is uptrends with moderate downtrends. They look moderate, because remember this is log scaling, because this is now in percentage instead of unit. So you start with a super macro and you understand, are we on a big macro green light on the super macro scale, or are we on a red light or potentially an amber light? Largely, the super macro is from there up to there. We're largely an expansive bull. You will, of course, note, though, that we are in a period right now where it's not been bullish and it's been pulling back. That comes later. We go to our trend view. You drop that down. This one will go to daily. Daily. This is your time frame. This captures largely what we've got here. And this one, while the super macro is a big green light, that's how you've been expanding. We're looking at an expanding asset category. Now is not the sunniest season for that super macro. And in fact, as we all know, the 20,000, and this is the reality for most people, because we don't live in the weekly chart. The weekly chart, just to get 5 or 6 candles, that's already an entire month worth of data. So everybody is in the more shorter term reality of this. And this has been a bear market, lots of burnt hands and a lot of weakened spirits. We did have this flat grind line, and we suggested that there would be downside structure to this. It got a nice impulsive break there when we ran that third low, and then we dipped down. When you take out a relative low like that, there'll be a lot of support and resistant traders. What happened? We got a flag. Okay, there was a rally, and then we pumped down again. I say pumped, it's been moderate break sell-offs. This is not capitulated. We've also got to remember, this is something that was 20,000, that at that low at 6,000 had already lost effectively 70%. So this is a late bear, very big pattern. So I am less confident about, wow, the geometry on this is going to get made. It's 1,621, which is roughly where the target is if you take it from that high to the low. This is, excuse me, a projection down from roughly our midpoint in our H3, which is between that high and that low. So I need to pull that down a little bit more to get it in the middle. I'm not going to spend too much time doing all the detail of the draw, but essentially you get the target way down there. Let's scale that. And that's where I got the 1,621, roughly around there. So I'm not saying, wow, we're definitely getting there. First of all, there's never any definites, even when you're very certain. With a late stage bear market pattern, possibly it's even more under question. Also, the way we've capitulated is reasonable but not exceptional. It's not yet got super impulsive to the downside. Excuse me, I've got a tickle here. So what we've had is consistent rallies to every sell-off. A sell-off, we took out that low 2, rally. We sold off, we then took out the low 1, which gets all the headlines blaring, new low for Bitcoin, new low for Bitcoin, read all about it, boom, 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 and you start to get some structure and squeezing. I'd also drawn this falling wedge and wondered if we were going to spill out the bottom, as for the macro, whether there was a slight chance we would pop out and have a run to the upside, and then it'll relieve some of the shorts that were going on. There is a pop out, but on this scale, on this time frame, it's not that significant. It's not actually that volatile. I know if you're trading on the hourly, it was really hurtful, and it got you if you were short. And that was get the bull smiling again with a little bit of a push. But actually, we've seen that before and better right at these lows over here. So this does not mean the bear market is over. It just meant that constriction has resolved itself in an impulsive move to the upside, not the downside. So we were right about an impulsive move coming. We weren't sure which side it came. We've been biasing short because of this daily trend, which is the predominant trend, and in fact it popped out the top. We've had pop out the top wedges before that have then gone on to trade lower. Here's a couple of examples there. So a wedge pop to the upside does not mean the end of a bear market. Here's another one, just lower. We had it over here as well. Pop out the wedge, trade lower. Over here as well. Pop out the wedge, trade lower. In fact, just about every time we've got wedges and down legs here, they will pop to the upside and then they will fail lower. Is this going to be the same case? Is this high momentum out of the wedge that it's going to be a trend-changing event? Not really for me. Look at that. That was even bigger and it still traded lower. So for me, you've got to stay with the daily trend and still be a marginal bias bear. That said, this is not yet done its full capitulation. So 5 stages of a breakout. You get the feign and break back in. You get the second chance sometimes if you make your first interim and you pull back to your funnel. The guys today have been learning all about it, been taught about it. Then you go all the way into capitulation stage, which is where you make real money. You get the big stretchy candles on the downside. Or if it's an upside, the melt up stage. You haven't really had that yet. So there is a bit of a D-day coming for this downside setup. It's either got to put up or it's going to shut up and fail. So it could be like the silver inverted HVFs that you got late in the trend after the big blow off bull to $49, coming back down to 30, 25, 26, and then you had a big macro setup and it sold off, and then it kind of started to get a bit limp and lame and is dribbling out. Remember, patterns fail. It's not guarantees, especially late big patterns in later to the trend, and eventually they can reverse. So where are we with this? As yet, it's not entirely clear, but this does not a bull denote. Unfortunately, it's like one swallow does not a summer make, and in that essence, that is what it is right now. We can roll over and sell more, and in fact, if that got super impulsive, often after the wedge breaks, we've actually had super impulsive selling off to the downside. Wedge breaks, super impulsive selling off to the downside. Wedge breaks, super impulsive selling to the downside. You've got 3 examples of wedge breaks that first go up, roll over, and sell down harder and lower at probably some of the most impulsive rates. So what does that mean for your trading? Look for this break, the roll over, and make sure you catch any super impulsive down the other side. You have 3 examples, 3 times, 3 out of 3, rolling to the downside. I'm not going to argue with those odds. So for me, it's not the biggest sample set in the world, but it's decent for what we're having a look. So I don't advise, but what I will be looking for to trade, and you can decide whatever you do, would be watch out for the rollover in Bitcoin out of the pop out of the falling wedge for an accelerated capitulated moment. It could be very rewarding. It will be fast, it will be to the downside. And this overall macro setup owes us stage 3 yet. We haven't got it yet. We've had the break and a triggering event of that low 3 there. We've had some pullbacks, not quite a second chance, but some pullbacks at the first interim. We haven't got our second interim. It's right down at 3,990 odd, through the 4K mark. That's some way off. That would require a good capitulative sell, and that would probably be one of the biggest you'd have out of this pattern. If it does that, the bears will be reasserting, and this just would have been a battle one for the bulls over the last few days, not the wall. That's kind of, if you're pushing me, it's not high probability, but it's a decent probability with where we're at now. So I wouldn't go public with opinions, but that's my best guess for you on Bitcoin right now. Why is Bitcoin so important? Because it'll dictate the Ethereum, it'll dictate the EOS, it'll dictate the asset category as a whole. There will be various betas between them. Some will fall harder, further, and faster. Others will show relatively more strength. There might even be some small coins that will pop and run that are recent and new and got a PR machine behind them. Who knows? But overall, I would expect crypto market cap to contract. A lot of people saying, oh, but Bitcoin, if it drops below 100 billion and the futures market and all of that, it looks like it is the chance that it'll drop below 100 billion. Sorry to say, I don't know what that'll mean for the futures market. It's not for me to decide or to say. What was the other crypto? Some asked about Steem, and this one they asked about Steem BTC. So Steem's popular with the decentralized blogging. That's your chart. That's what you've got. You had a clear grind line here, gents. After a long sell-off, it's underperformed Bitcoin, but many of them have. You had a clear grind there and a squeeze and you've traded down. Then you've got an upside HVF. Look at that over there. Over performance. You will have seen it. You will have got your target. You should draw those funnels if you go back to this. I'm on the daily. The daily is the super macro for this. We don't have any more data. This is where it starts on the Poloniex exchange. It may start early on one or two of the others. I didn't have time to check all the other exchanges. You should do a 360 degree across all exchanges, because you might get anomalies in data, or you might get slightly different viewpoints. I think also within this, around about this target, just through it, if you take the target, key levels of significance, you get your horizontal neckline for a head and shoulders. Who sees the head and shoulders in the room? Anybody? Yep, left shoulder, head, downside, right shoulder. How did that do? Okay, let's grab it, let's take it. You get it from your high, you take the HVF, method, head and shoulders, no slanty, clever lines. You obviously take the price point, that was your target from your HVF. It was quite simple that. You project that down, and that's clearly not going to make it. That's the geometry of the logarithmic charts. I forgot I was in log mode. Geez, that line got long. No, it never happened. Okay, so that's clear, and it's not going to be of any net worth. You broke. You've got a return move to it, so it is still a significant line. Let's put it all the way through, or you can put it on the ray, and you can check it. So what's actually the story going on? Support. There's been a lot of support for it here, here, and then we've dipped down there and there again. Low vol, but they continue to come back down. Unfortunately, during this bear market, I think alts generally suffer. Steem, from what I know, actually is being used and has real utility and actually has some quality. So I certainly wouldn't sweepingly categorize it as a shitcoin. I would say, you know, respect to them, and we're building a profile on Steemit, and people can follow us there, by the way, as well, for that day when YouTube say I'm an unsavory, uncouth beast that should be tamed and muzzled, and that surely won't be far away. So that's what I would suggest. You might want to watch that. We've got to just slightly low there, slightly low. You just have had a pop. I fear for a lot of people that are looking to bottom pick alts right now. Unfortunately, people ask me to have a look at something, so I have a look at it. But this really doesn't become too relevant until we properly get an end to the sell-off in Bitcoin. If Bitcoin does go sub 4K as part of its journey to maybe 1621, as I say, I'm certainly not betting my farm on that. It's not a forecast. It's a possible geometrically dictated target. But if it just gets sub the 4K, this is going to battle. This is going to battle against everything. It's a smaller coin, doesn't have the history. It's probably going to make new lows. What you could find out then is you get an inverted setup across here, and that becomes an amplitude for some downside against Bitcoin, because it'll fall even harder for a while. Even though it has a use, it can become a very low value coin, and then it can recover in the next bull market. That's Steem. Just to be clear, HVF method is useful across everything. So some folk have asked for the Euro USD, and we've been FX traders far longer than we've been crypto traders. So for some of you, what's the dollar been doing? We did a clip a long time ago saying dollar strength, and it hasn't really changed. What's happening here now, I suspect, is the reason why the guys have asked. You should draw your previous structure and get your funnels out of all of that. Little bit ascending of nature, those upside HVFs. That means the buy side is coming up a bit steeply, but you probably had your low 3 here. You should use the ray lines rather than what I've done. So draw it like this with a ray, switch to ray, grab your color, put your stop in there in red, make it solid. That's the annotation. That's would have been your stop. You can run it through, and that would have been your entry point long on your third high. Draw your target. It was somewhere up here. You can check it for yourself. We do those in purple, and you can see why that was a call, that there's a churn and an inverted HVF and a turn to the downside, and that this was a critical run. Note how you get the bounce off the funnel first, and then you're smashing. Because it's a key level of significance. There's a reaction, it pulls back for a short while when it was largely one-way traffic, and then it smashes it with momentum. That's how price behavior rolls when it hits a key wall. In this case, it overcame it without too much difficulty. Where would that target have been? It could have been useful. I'll just show you because that was historic, and that's when we were looking at how this congestion, that's almost perfectly on the line, was going to resolve over there. That's through your midpoint. So what are we doing here is the next question. Well, you've invalidated an upside on a daily time frame. You've invalidated the funnel. That means for the daily time frame you are undoing. But you have had a bit of a pause here. It's quite possible this is a left shoulder. You end up with a head, and you could end up getting, this could be a weak right shoulder for a head and shoulders. But that funnel up top there is a bit high for a neckline, but this could be an inverted. Note that you get a very steep sell-off, secondary, a very steep sell-off. But look at this candle today. That's been really strong though. So we're getting a little bit of mixed signals here in terms of the euro. So let's drop down in it. Is this flat bottomed? You better believe it's very flat bottomed. In fact, I think that little point there has gone slightly lower than this. Again, I'm on FXCM data. Check if it's true for your broker data. Data varies. Data can vary. So on the euro, this candle is a worry for the bear side. I would have been very comfortable with looking to trade the short with that. It's rallied, failed in the funnel, come back down, second impulse, very strong down again. So the momentum swings on those down legs are heavy and strong. But the only candle's the worry is the current one. That's far too impulsive. That's far too impulsive. So it's a potential spoiler for anything going down here. We would have liked it to run like that. Who knows? When I say daily, it's obviously not trading today. We're Sunday. That would have been Friday, and that's how it closed on Friday. If it's immediately taken back on Monday, you might be able to negate that candle. In other words, followed by a big red belt hold back down, no worries, carry on. Model for your downside. If it isn't, that's potentially some complexity. It might make a deeper or a higher second impulse, and this is just a bit of a zig and a zag. That's starting to get messy. In other words, not really interested in the trade here so much. But it was a key point that this funnel was support on the way down before being broken, and it is still serving as resistance at this point on that rally. So in terms of the Euro USD, until you take that back and get back above this funnel and show you supporting on it again, the invalidation of this upside HVS funnel is critical for this time frame under review. We are on a no longer a bull market, we're on a bear market that is now asserted since this point, and you have to go with a default bias of bearishness, although as I've already said, that's a worry. So no real trade because the short term is slightly contradicting the trend view, which is bearishness. So that's the Euro USD. What else do we want to see? There were some others. Talk to me. Okay, well, just before we go on to anything else, give me your ideas. This is open stream. You guys can give. I've got Bernard on the stream here. Watch the chat. Tell us what you're interested in, what you like, and I'll have a look at one or two of the free stream guys. Guys in the room, we're talking about the BTC USD longs. Now, something for you to consider as additional study. In actual case, we're coming quite close to all-time highs on Bitfinex-based longs on BTC. Longer run, that's not so bullish because that means a lot of people are already in and standing on the long side of the boat. So what could happen is those guys could get closed out. Remember those falling wedges and the pop out and then the rollover and then the capitulation? That capitulation comes with all those longs having to liquidate and become sellers. So we've got an upside. What is this number? Some have asked in the room. This is number of units that are long. And in the history of Bitfinex printing this data, that was pretty much an all-time high. It's not a huge amount of history. It's only about 9 months, 10 months. But nonetheless, this has got a little bit of upside HVF structure in it. So that means more people are jumping into the long side. That said, it's still to make that second interim. So there could be more of a rally to come first, or more people buying in an indifferent market. It doesn't mean, because longs are getting more aggressive, that they're right or that they're winning. We've actually had quite a lot of period where the longs have been climbing on a decreasing BTC USD. But it's something to bear in mind, and maybe the first sign of weakness will come after this interim has run. So we've actually got some HVF method structure on the longs. You should also potentially have a look at what the shorts are doing on the very same underlying market. So let's do it. BTC USD shorts. Bitfinex, we get an interactive chart. You're taking another chart for guys to look at. So we had a blow-off high. Now you might recall that we had the pump in BTC USD over here. That occurred with a short squeeze. Where's my shorts? There she goes. That occurred with a short squeeze. Since then, we've had a rounded bottom like that. Some people like to call cup and saucer, although this little handle has already been a little bit dipped, a little bit deeper. But this means shorts are leaving the trade and they're running to a lower level. We're at about 23,000 and we're in the upper highs for the longs. What are the longs in thousands? They are climbing in 33. So the longs are expanding into this, often leveraged, and the shorts are contracting. So I'm not so impressed of that move given that data, which supports the view that we get the rally rounding out of the rising wedge, the falling wedge, and then the rollover. This was the chart that I think I did it on and that I showed you. Falling wedge, rally, rounding, falling over. That's capitulation, some of those longs liquidating. So that's just a little bit of extra data on the cryptos. Who would like me to look at something?
XMR USD.
Monero against the dollar. Monero against the dollar. XMR USD. We'll go with the Bitfinex platform again. So everybody's favorite security coin. The daily is your big time frame on this. Weekly, you don't have sufficient data really. Although it's been around a while, it's not one of the earliest. Let's just see if we can squeeze a weekly in. That's your macro view. Very similar to Bitcoin if we make this a logarithmic scale. You will see that it'll flatten it out a little bit. But essentially it's a bull market facing its first real bear. You could argue that was a bit of a sell-off period over there, given that that's a weekly chart, and so was that. But this is clearly the biggest challenge Monero has faced in price valuation percentage terms on the log scale of all of these. So time frame, much longer. So you've been since the 18th of December all the way through this year, and it isn't necessarily over yet. While these were relatively short-lived. A little bit of a sketchy wick there, which could have been the exchange or just a lack of liquidity. Nice upside setups on the way, the upside HVFs right there, and some of these. Very low volatility begets expansive moves and profits. See that there on the upside. Now we're in a bit of a different state. I'm going to rather drop it to the daily now, and we'll analyze that mooned period to the bear market. So let's pull it through. Have a look at that. There was a bit of a standing level. Sketchy wicks again, I would say. So watch that for liquidity sometimes, maybe on this particular exchange. You run those levels. So that's a bit of an ugly line that you've collapsed to a number of times. What is the nearest logical round number? I'm looking at 165. It might be the 160. It might be the 170 level, but you dipped there a few times, rolled over, dipped there, rallied, rolled over. This is called typically a descending triangle that you would get out of here. You've got effectively that, and you might have had your midpoint there. So that's your blue line, that's your midpoint line, and that's your sell-off. So that's kind of like a falling wedge, only I've horizontalized that instead of making it descending, and you got your pump out of it. You ran a funnel there, and since then, you've been in a steady losing process. Remember, I'm doing this against dollar. Some might ask, why are you doing it against dollar? Why not against Bitcoin? In the bull markets, I want to build BTC value because Bitcoin is going up. I want the highest value asset class benchmark. In an environment that is bearish where BTC is shedding value to fiat, I want to make decisions based on fiat, because the alternative is, as a global hedge fund manager, you are your own global hedge fund manager, you owe it to yourself to be in the stronger asset class. If that means fiat for now, because most cryptos are shrinking, be there. We don't like saying it, we don't love the dollar, all those good things. Get out of the belief systems and do what's good for your pocket and your family and your future and building up your wealth and all of those good things. So back to Monero, a nasty spill, a funny old spike. So it's a little bit skittish, this chart. So I'm not that comfortable with it as a trading thing, which explains one of the reasons why I'm regularly not trading it. I've seen it a few times. See that lower grind line over there? That lower grind line has occurred. People have rolled over out of it, and then it's fallen. Look at that little squeeze that you get, often out of a grind line. First you break, then you get a real little squeeze. It's super small, and you don't really get a full return move, and it rolls. Continuation rolls. Look at that for a pennant, aka inverted HVF on a smaller time frame. Dig it out and have a look at it. Down, down, down she goes. Down, down, down she goes. Targets being made. Hold a floor for a while here, held a floor for a while here, then a descending line, descending triangle, not bullish I'm afraid. What happens? Floor drops. How would you typically target for that? You'd probably do something like that and project it down. I'm not sure if I'm still on the log scale, whether that will expand as a line. No, that I would have projected it from the low vol point, and that would have got you a target. Look at that wick. That's a bit sketchy. I don't like that too much because it points to bad data, or maybe one whale pushing the market around a lot. It's a little bit concerning. That's why I prefer a lot of my trading on BTC. Even when I know there's coins that will fall further than BTC, I don't know, but I assess on balance of probabilities certain ones with higher betas that fall harder when BTC falls. Just to avoid this kind of skippiness, I prefer to be in the liquid coin that gives a decent print. So now you ask what's happening now, and the truth of the matter is it's not a very high probability situation. I do not find it an interesting situation. We've got an element of grind along the bottom here, which maybe means some drift up support, but that can exhaust and you'll probably end up breaking back down through this. This doesn't look good for me as a hold. Doesn't look good for me as a hold on balance of probabilities. This is 4 hourly. I don't need to drop to an hourly, a half hourly, or a 5-minute chart in this. I don't want to be here as a whole. But is it a surefire short? No. In other words, just because something's not a hold long doesn't mean it's the polar opposite to short. There's that in-between land where it's just a bunch of churn. It's not particularly strong, but it's not necessarily convincingly going to be naturally weak. So I leave it. Most of your game is a disqualification process of not trades. Your default answer is no trade. You're really picking the best of a beauty parade. You want to have all the best on a stage and you're only taking one. That's the game you should be, and it's the most beautiful. This is a whole bunch of nothing and nothing particularly special here for me on either direction. So Monero is not interesting. Another one for us that might have
Power.
power.
That's the odd
BTC.
one. I don't know if anyone in the room has got.
I don't want to get into too many very minor coins that very few people can trade or know anything about, but I'll do this one. Power, BTC. Don't know it. What's it? Is it PW?
POWTR.
Ledger.
It might be Power Ledger.
Yeah.
Binance. Does seem like recently it's had a bit of a push up, but this is against Bitcoin now. Remember that we're valuing this now against Bitcoin. Again, if you look at this chart, can you see it's kind of fuzzy? Doesn't have that clean lines. Do any of you notice what I'm trying to say there? The sort of sketchiness. It's a little bit nervy. I'm not a fan. You see all these little hairy wicks. It's kind of like it needs a shave, a bit of a pubic bush both top and below. That's 3 days into a bit of overrun growth and needs a bit of grooming. Those are not charts that I really want to go playing with. They stink up the place. So I really just don't. I don't like the lack of a lack of liquidity. The point is, anything you get into, you've got to find a way to get out of. And these wicks just don't do a bid print. As a good technical trader, and this is not to victimize the person who suggested it, all respect to you, you may have a great fundamental narrative for why we should care, and this thing could go up 10x and you're a multi, and I really wish whoever suggested it well with it. I just don't know anything about it fundamentally, so technically my commentary is just not particularly flattering. This thing had a major pump on its list that it then sold down into. So you don't have much of a draw. I'm still trying to get in how high it was pumped. I have a serious concern with coins that on a list day have created so much PR and mania that I have to rescale a chart like I'm doing now just to see how high what some idiot actually paid for the coin.
And you're still
before it actually came about. So this is one of the reasons why I just stay the hell out of that. That's your chart for what some bloke actually paid for a couple of coin. In actual fact, it's 1.99. Somebody was stupid enough to pay 2 Bitcoin for a brand new ICO that is now trading 4 zeros and something Satoshis. So for me, technically there's not a great deal of history. It's not a clean chart. This could be manipulated by the issuer who's still holding 45, 65, 75% of the coins. Who was telling me about the percentage Veritasium was still being held personally? I mean, I'm not really interested. You want free float in the hands of lots of people. Why would you go to a blockchain, which is a decentralized platform, to participate in an asset that's wholly owned by one person? I want decentralized ownership. I want everybody to own bits of that coin in a proper market that is trading in true volume. So this is why, as I suspected, this is just not, I can't give a technical opinion on this of any value, and I would actually, if you're a technical trader, I would stay away from these things. Someone has called for Bitcoin Cash. I promise it wasn't me, because I went to Anarchapuco and had an interview with Roger Ver. Apparently he owns me now. I wish I could get I wish I knew where those check stubs were that he's sending me. No, it doesn't, and I'm not easily bought. So let's have a look at it. We'll do it on Bitfinex as well. Let's get out of it again. See, let's do it on Bitfinex. So once again, start right at the big time frame. In fact, I will have some draw history on this because it's the one I have looked before. And that's because I look at the big coins. The top 5 is where I spend. I've looked at EOS, I've looked at Ripple, I've looked at Ethereum, I look at Bitcoin Cash most. I spend 80% of my time there, then I look 20% at the top 10 down to the 15 or 25. Why? You want proper charts, you want proper floats, you want a diverse ownership pool, you want real liquidity, you want to be able to get in and out, you want a decent chart, you want to have some confidence that you want to have multiple exchanges of listing so that you're not beholden to one set of bots, whatever the case may be. So that's my philosophy if you're intending to be a trader. And even Bitcoin Cash in the early days, very sketchy wicks there. Which you shouldn't want to see. It's not comforting, but better more recently. We're looking at it here. In fact, I'm going to actually change this to BCC because Bitfinex took it from the very, very beginning, while some of these came in later, and I did have, no, I don't want Binance. We'll do Bittrex. I know Bittrex is not the highest liquidity, isn't it? They delisted, or they've changed it to BCH, haven't they, on Bitfinex? That's what's confusing me. These guys, I can't keep up. So BCH, no, that's still not Bittrex. So they only got the data since they changed the name, and they've delisted the BCC. How unhelpful is that? That is a real problem. I've done a lot of technical work there that I could have shown you and plugged in, and it would take quite a while to redo. So I'll go back to the Bitfinex instead. So there you go. I've learned something by trying to look at it. It shows how long last I actually looked at that coin on a big time frame. So let's have a look at it on Bitfinex. So this was the last time we were here. We took a little long setup and we properly nicked this one and made some money on this one here with that little long, and we made our target. And it was literally the last time we wanted to be long, and I've actually traded it a little bit short for a short time frame on this way on the down leg. But overall, on a big time frame, it has had a squeeze that started a break, and it is in this drift down, and then each time it's going to go down. And I've got to say, until Bitcoin, unless there's a full-blown flippening, which everyone keeps waiting for, and I think you can wait forever for, I think it's going to be reliant on BTC to show some strength before it itself shows strength. It's drifting down, and it is against Bitcoin, and it's not holding up. Bitcoin has held up better in this period of bear market than it for now, and it is coming quite close to this technical point. A failure through this technical point here is an undesirable event, I would argue, because the last time, and the next lowest point that was supported is here, and I would argue this is probably the real level. That is just a crazy wick when we go back to this history here, and even to a small degree there. So that is probably the last. You wouldn't want to, as a BCH holder, see it run that. You wouldn't want to. Is there any structure for upside right now? No. What's happening on these little wicks over here? What's happening on them? You can see you're getting selling. You're getting selling on the rallies. It can't hold on to any rally. It's being sold half down, and then you've got a little bit of a shooting star. Even if you were just a tactical trader, let's take this into so you can see it properly on on a bigger time frame. Everyone loves how badly I drive on TradingView. I'm a terrible driver. There we go. You can see it gets absolutely cane back down, and then you get effectively a shooting star after a single attempt to rally and the follow-up. And then you're getting a sell-off that, tactically you could short the low there and it might go down. I wouldn't. That's tactical trading. I don't do that. I need much bigger reason to trade. But you've got a zig down leg, and then you've got another, and Ellioticians will call this as an A, B, C, D type move. You've got that. So it's continuing to bleed out in a kind of fairly low volatility way to Bitcoin. So you're being eroded away in Bitcoin Cash versus Bitcoin. So if you're insisting on being in crypto at the moment and you're not parked up in fiat while we seeing off the deep, you're better off in BTC than in BCH right now. So there you go. The checks will stop from Roger Ver. Damn. Anyway, so that's my take on that. Not looking particularly great, but when it pumps, it was in a falling wedge. When it does pump quite hard and firm. So, there was an interesting structure, but there was no follow through. So this is actually one big complex first impulse. We could have a second impulse putting in the down leg now, but it needs to put in a base soon. Because if it runs really flat bottom, that only bases out here even, it's very, very flat bottom. I don't like that. Don't like that, and I don't want to be trading that. So it really needs to stop going down, and at the moment it doesn't look like that for those selling wicks. So not exciting place BCH. Actually, sad as it is to me to say, your dollar is the place where you should be, and you should be trading most of your cryptos to the short side in the liquid top 5. That is my take on the crypto markets, and you've even seen there's a probability that dollar may continue to be strong apart from this day. We need to see how this resolves even against the other fiats. So, we're all waiting a dollar collapse. I'm the reset sniper at the end of the day, but it ain't here yet. And you've got to put, it's like a monkey on a hot tin roof. You've got to keep dancing and moving the stuff around into the places where you can survive. And as much as you don't want to be standing on the dollar roof, it's probably the coolest one for now, without burning your feet. So that's my take on the Euro USD and a couple of cryptos. Hope you enjoyed the live stream. And also to all our guys, maybe show the camera around. Well done for a big theory weekend. Excellent. I'm done. Thanks.
Thank you.
So that's my take, gentlemen.